Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with our analysis of the gold market. So, as was suggested yesterday, this market was forming the regardless triple to sell pattern around 1830, 1835 area, and market hits the major targets, and we said that here market either will turn down or it might be decisive upper breakout. Market will fall into the next stop, which is actually the target stands around 1910. So, with anticipation of the higher CPI numbers, actually, we've got really outstanding levels of 7.5. That puts the United States very close to the emerging markets. Just for example, I could say that in Russia, for example, the inflation stands around 8.5%. So it's not a really big difference currently. That was actually not very typical. So anyway, what we could say about the downward action on the gold market. Well, speaking about the head and shoulders, yes, market shows a bit overextended right arm, which is not good for the pattern. That tells us that if even, well, this market probably still has chances to reverse it and keep going higher. This is possible. And the further longer term picture will depend on what will happen with this pattern. If market somehow will keep going lower, back to the neckline, that will be the clear sign that we will get the downward extension. If market starts to flooring somewhere around the middle of this range, turning to some sideways action without tending to the neck, that will stand more in favor of the bulls. So currently, although reaction stands nice and in general we see some bearish background for gold, it is still a question how it will react in a more extended period. It's because, well, the financial component is really important, especially in the United States, but the gold is such an asset that also sensitive to other factors, and nobody canceled the geopolitical tensions. And if they start turning to the hot stage, gold definitely should get the boost. So that's why I would suggest that downward action here should go a bit lower, but currently I'm not ready to say that definitely will be the breakout and so on. So we need to keep watching what will happen. On the financial background, yes indeed, if we'll take a look, for example, what is going on the interest rates, market starting falling to our suggestion that it should tend higher to next destination point, which is the 2.16. This is 10-year yield, United States. You can suggest minor stop has been made on around 127 extension. Market is falling up to the 1618. Currently, only the daily overbought stops market for the appreciation, but already consumer rates exceeded 2%. Historically, guys, the 2.5 level on the 10-year yield, this is the kind of the threshold level. So, and it's important making impact on the psychology, on the sentiment of the investors, because above the 2.5%, interest rate starts challenging the dividend yield of the stocks, making money significantly more expensive, which makes impact on the performance of the companies, and other markets, including the gold, starts feeling the interest rates appreciation harder. So, in the fact that market stands around 2% already above it, slightly, well, this is, of course, can't be called as a bullish sign for the gold. Second moment, don't forget that today we also get the Fed minutes protocol from the January meeting, and it also could make significant impact on the markets, just because if investors read that a lot of members of the committee intends to vote for more aggressive rate hike, for example 0.5% in the March, that will be important component. That will be important background for the markets as well. So be prepared for volatility today as well. So that's about the dollar index, on the 10-year yield. On the dollar index, guys, in the shorter term, you could see that on the daily chart we have bullish reversal bar. And it means that at least minor retracement here should become a bit higher. So I mean, at least the minor continuation of this action should follow. Maybe we are not ready to say about the further upward action, but at least some minor continuation has big chance to happen. All the stuff put the shadow on the gold, and in the current circumstances, I would suggest that this action probably will become weaker. But how long weaker? So let's take a look at the fall time frame chart. Here we have the free drive, 222. Downward action is starting, and you could use few different target calculations. Currently, we do not have yet any ABCDs. We can't say that's what the target will be, but we know that at least 30% support is a target of the any 222, which stands 18 area. Additionally, on the hourly chart, we have kind of the consolidation support line, which market also could fall. So this support starts around 1803, but with the speed of the downward action, maybe it will be a bit of around 1805, right? So 1805, it's very close to the 618 support, which is more or less corresponds to the idea of the bit deeper downward action. Finally, if you drop your time frame more, even you could see it on the hourly chart. Here's we have the high wave pattern with the fake breakout to the upside, volatility on the CPI report, and downward action. You could also use it as a target. So for a target calculation, you need to measure its length and count it down in the case of downside breakout. It's approximately will be the same destination point around 1805. Currently, I do not see any other tools that we could use. Maybe you have your own tools for the downside target calculation, but this is most common things that we used here. So all the stuff suggests that maybe the market could show the pullback to the 1805, especially if today the Fed meeting results will be more or less hawkish. So this current situation tells us that if you have the bullish view, it's definitely not the point yet for taking the long positions, or you need to wait at least to the 1805, then see what will happen here. If you have the bearish view, well, and you haven't taken the position yesterday as we discussed, so you could try to catch some minor pullback here with the stops above the stop, because if market will return right back up and taken out of this top, it just means that reaction is over and it's ready to go higher with the daily pattern, erasing it, I mean the hand shoulders, and keep going higher, at least to the previous top around 1875. So that's why currently, actually, for any short-term bullish bearish trade, this level is working like the invalidation point. So that's our view on the gold market.